What's up, everybody? Welcome back to the channel, Real Estate Money Media. I'm your host, Coronel, and we're back again with another video. And so, what this video is about is I'm thinking about developing a series to address the issues that a lot of investors have in just beginning to start to invest in commercial real estate. Many of you are familiar with residential, you own several homes. You've invested in condos. You've invested in single families. You've maybe even done 3 and 4 plexes. You've done a number of things. But when it comes to investing in commercial real estate, whether that be um, warehouses, apartment buildings, etc., or even going concerns like hotels or gas stations or liquor stores or what have you, you're all looking at it as if it's a lot more complicated than it actually is. So, what I wanted to do is kind of address bit by bit some of the things that I think people are having an issue with, and one of those things being the hidden costs. So today, what we're going to focus on are the hidden costs, the hidden pitfalls that people think are there, that people know are there, and let's just kind of get them out in the open. I've got the boogeyman here at the bottom in the lower third, who's a wrestling character. But, what's the boogeyman when it comes to commercial real estate? People are concerned that the moment they close on this property, there are going to be some issues, some costs. There's going to be some sort of failure that they didn't see. And this is just one of them. One of them. Hidden costs. So let's get right into it. So first of all, what are some of the, I guess, hidden costs that people perceive to be an issue? One would be repairs and maintenance, and again, this is just going to be a cursory overview because there are different kinds of maintenance. There are different categories of maintenance that we would want to address. But let's just have an overall general category of repairs and maintenance. People are afraid that the moment they buy this property, there's going to be some sort of laundry list that develops as a result of things breaking down the moment they buy it. And this happens. It's not as if this is unfounded, but how do you get beyond this is the question. How do we get around this? The next one would be property tax adjustments, right? Again, not unfounded, but there is a way which we should address in another video because again, this is a cursory overview. There's a way of getting around this. There's a way of addressing this as well. So it's not something that we should be afraid of. Another one might be utility issues. The HVAC unit failing, or structural issues, the roof caving in, or whatever. These are all concerns that are normal, are typical. They're not unfounded, but the way we address those is going to be in a number of ways, and let's begin to talk about that. So the first thing we should probably do when beginning to look at commercial real estate is we need to develop a sort of due diligence checklist, right? And I've got that due diligence checklist separated into about 4 categories. The first one is going to be legal. So, from a legal standpoint, we need to figure out if there are any liens, if there are any disputes associated with this property. So we need to run a title check, right? And we also need to figure out if the property is in compliance. I have a story. I have a client. It's a guy that I'm working on. He has a property in a nearby place. I won't say where because I never know who could be watching, but he has a property that is not in compliance. As a matter of fact, many of the uses, the zoning has changed to the point where many of the uses that he has in that location, I won't even say what kind of property it is, many of those uses are being grandfathered in, or they themselves are violations. To the point that if someone were to buy this property and they didn't know that, the next person cannot have those same uses. So It's the moment those leases expire, those people, those tenants would have to get out, and that person who owns that property would have to really essentially redevelop the property, because what's there currently as configured is no longer allowed per the zoning code. So you would want to, you would want to figure that out, but you'd also want to figure out what's legally going on with this property to avoid it being an issue in the future. The next one would be obviously financial. You need a due diligence list to kind of figure out what the KPIs that folks are looking for in this area or for this property type, because it's always different. You'd want to figure out if the cash flow is flowing smoothly. Is it trickling in? Is there some sort of economic vacancy that this property is experiencing, economic occupancy issues, etc., physical vacancy. You'd want to figure all of that stuff out, and that is going to impact the financials, right? You'd want to verify the expenses. Okay, how much does this cost? What is the landlord responsible for? Some of that's going to go back to the legal, with the types of leases that are being used, etc. But you want to verify and validate what is going on with the expenses, and you're going to do that in a number of ways, which we can talk about in another video. The next category is physical. Obviously, this is one of the more obvious, I think, alongside financial. You want to know how much money the place is making, but the bank's going to kind of help you with that. The bank's also going to help you with the physical, but you need to be aware of what shape and condition this roof is in. You need to know how well the HVAC system is being maintained, or HVAC systems are being maintained, rooftop units, whatever's in there. You need to know what's going on, along with what's possible in that property, right? So you got to figure all of that stuff out before you move forward, just to make sure you're not inviting the wrong. You don't get in there and think that you can do something with this property or have a certain tenant in this property, and then it turns out that you can't operate there with that particular use. Another one would be operational stuff, right? How happy are your tenants? You need tenants, right? And so how happy are the tenants? Has the property management been efficient? Is it a well-oiled machine, so to speak, in terms of how this property is being maintained, how it's being managed, etc. Okay, and that goes back to, is the money trickling in? Who's collecting the money? Sometimes you're buying things that are self-managed, which is another shortcut that's also going to impact the financials. And so these are all things that you're going to want to be aware of. The next thing that I would suggest is not to go into this thing alone. And what I mean by that, you gotta call in the cavalry, man. You gotta get your property inspectors. You gotta get your legal team together, and you gotta go in there and attack this thing as if you don't know anything. So you're gonna hire people, structural engineers. You're going to hire attorneys. You're going to hire contractors in some cases to figure out and get an accurate idea of what's wrong, how much life is left on certain components, and the like. And you're going to do this so that you know exactly what's going on with that property. And here's a little pro tip: you're going to want recommendations for people. You're going to want to see reviews online for these people, and you're also going to want referrals for these people. So get a lot of different folks that you think might be able to do the job, and then try and weed them out based upon these referrals, reviews, and recommendations. Like I said, I've seen some pretty horrible things happen in the past. I remember one time, this was a client that I was helping. I did not put them in this situation, so please keep that in mind. But I had a client that I was helping them to find a new location. And they told me of an instance where they had a location where the parking was inadequate, and they didn't find out until after they had signed the lease and they were going to get an occupancy permit. So for the use that they had in this space, the parking was inadequate. So that became an issue. They figured out a way to fix it, but what happened was it cost them more money in terms of the build out of the space, because I think they had to add another bathroom or something in order. There was something they had to do. Maybe they had to do a parking space, but they had to do something. It cost them money that they had not allocated towards the budget initially, right? There was another instance where there was a mobile home park that a client of mine had purchased. I was representing them on the sale, but basically they told me about how this mobile home park was, half of it was in a town or a township, and the other half was in the county. And so the water was coming from the township, and there was other things that were coming that were associated with the county. And so the taxes and the water went up in the township, and it totally blew their numbers out of the water. And it was a simple due diligence mistake on their end, a simple oversight that, had they known, they could have kind of factored this in before purchasing the property, and maybe save themselves a headache because they ended up having to reroute the water from the city. They ended up like connecting to the county water, and which was a cost in and of itself that they did not foresee having to make. So to sum it all up, I just want you guys to be super diligent. These are some ideas. If you'd like for us to talk more about this in the future, to go deeper into some of the topics, we can do that. More than happy to do that. But feel free to comment below, like, subscribe, and I will see you all on the next video. Peace.